One of the unspoken rules of public speaking is to leave your audience wanting more. Whether this was the intention of the Planning Institute of Jamaica at their recently held quarterly press briefing remains unclear. Questions abound, and in this era of expanded media platforms, it creates a dynamic for even more transparent public discourse. In that regard, our doors are open to the PIOJ to have a conversation with us here at CBR about the issues related to the performance of the Jamaican economy and the poverty data. However, in the interim, here are some questions that which come readily to mind. One, can a zero point 0.8 quarterly GDP growth rate be considered strong recovery when the economy contracted by 0.8% over the entire 2024-25 fiscal year? Two, how does the claim of broad-based growth align with declines in major sectors like agriculture, down 4.7%, mining down 4.2%, and electricity and water down 1.1% for fiscal year 2024-25? Three, why is the construction sector's 1.5% growth deemed significant when it includes a highly unusual 2,355.6% increase in NHC housing starts and a 632.1% growth in Port Authority capital expenditure, which are likely one-off spikes? Four, given a fall in stopover arrivals down 4.7% and cruise visitors down 13.4%, how credible is the claim that the hotels and restaurant sector grew based on a modest increase in the average stay length? Is this consistent with actual tourism demand trends? 5. If alumina production declined by 2.4% due to lower demand, how is this reconciled with claims of increased external demand driving overall GDP growth? Is the external demand narrative sector specific? 6. How can inequality be said to have fallen significantly based on a 2023 Gini coefficient of 0.3560 when the 2021 figure was 0.3991% and there was no data collected for 2022? At best, isn't this indicative rather than being conclusive? 7. What explains the emphasis on increased crop productivity when traditional export crops fell by 23.5% and animal farming declined by 1.5%? 8. Why does the report project GDP growth of up to 2% for fiscal year 2025-26, despite explicitly citing major downside risks like factory downtimes, hurricanes, and reduced global demand? What informs the optimism? 9. Given the high public reliance on remittances, some $3.4 billion in 2023, and their noted decline, how sustainable is the poverty reduction narrative without deeper economic transformation, and especially in the context of persistent anemic growth? And 10. How does the report's optimistic claim of reduced food poverty at 2.8% in 2023 reconcile with the Ministry of Health's data indicating that over 1.6 million Jamaicans were malnourished as of May 2024, and with regional findings showing the Caribbean had the highest rate of moderate to severe food insecurity globally at 58.8%? These questions are not intended to diminish in any way the efforts of the team at the Planning Institute of Jamaica, who have labored long and hard in the vineyard. Nonetheless, in uncertain times, trust in national statistics must rest not only on data, but on a willingness to explain, engage, and respond in a timely manner. We at Caribbean Business Review remain ready and willing to host that conversation. Until then, we invite our viewers and listeners to reflect on the questions posed, not to sow doubt, but to strengthen the integrity of our public economic dialogue.